Hey, my name is Calvin Waite. I trade crypto for a living, and it's time to turn on your inner nerd. Okay, so first off, I am not a licensed financial advisor. I don't have any licensing. So this channel has to be taken as watching Calvin trade, his ideas, how things work. So one other thing, this channel is not affiliated with Humble or Blocks or anything else. This is my personal project, and I think there are people that will benefit from it, so that's why I'm doing it. Good morning and happy Saturday. So we officially had our close yesterday, and it was over a 10% drop. So yesterday when I was looking at data and kind of estimating where, what today would look like after yesterday's close, I was using a drop of 7% or more severe. And it turns out that we dropped 10%, which was massive. We don't have that many cases of a 10% drop in a single day on Bitcoin. So the data is pretty interesting. So officially, we did print a sell on Bitcoin, but I have a hard time making the trade when we've dropped 10%. It feels like we've missed the sell, right? If you don't get your sell indicator a little bit earlier, it's hard to make that trading decision at the bottom. So I'm gonna hold off for a little while. I also had kind of a philosophical discussion with some of the people I trust, and just my own opinion. I feel like where we are, this is where our 2017 all-time high is. It feels like that's the range where I was looking to buy when we originally dropped, and it should provide pretty strong support. It was unbelievable to watch it just close through all of the supports that we thought we had, though. That was pretty amazing. So one other note, it would be this 200 weekly moving average is definitely not in play. I mean, there's not much here. It would take a pretty massive miracle for us to close tomorrow above 23,000. Stranger things have happened, though. A couple of thoughts. So whenever you see a big long bar in one direction, it's usually market makers kind of pushing the market a certain way, and it's usually going to be followed by an equal and opposite candle. So we had a long up here, a long down here, a long up here, wait, long down here. This is a lot of in the bear market, especially when we start going sideways, the market makers and manipulating players in the market, they don't make enough money from sideways action, so they will manufacture moves up and moves down, and it's actually so common in these periods that they've sort of labeled it as a Bart head formation. So you have kind of the head, and then you have the choppy hair, and then the other side of the head, and it goes both up and down. So during these sideways moves, you'll see a lot of this. So don't get scared out by a long move, because if we can go sideways for a little while, we'll probably see another move up. So, but we're interested in the longer trends and kind of seeing where things are going. Or where that danger zone is. Like, will we break below these supports here and have one more leg down? And nothing's off the table. We want to be very kind of aware of that. But I wanted to look at the prior experiences. So when we had our drop in 2017 or 2018, so this was the 2017 high, and we dropped down to here. I want you to notice what happened. things happened a lot quicker. So we had our move to the bottom down to 3,100 or something. And when we finally hit our bottom, we had a pretty strong move up. And then we kind of went sideways. We created almost a cup and handle here, but it all fell apart and we headed down for not just a little while, but it was a full month and a half. And our low was not too far off of our all-time low. We had the benefit of the 200-week moving average to kind of carry us through, but I wanted to measure the distance from the bottom up to our worst retracement, and it was a 6.32% move. So we had moved from our bottom, we had moved up 33%. So we hit our bottom, moved up 33%, fell all the way back down and touched about 6.5% twice. And then we moved on and we never saw these numbers again. But it took a while. And we even had an exit of the red zone that was a false alarm. Like we had a couple of things. So if you think about that, let's go back to our most recent experience. 33% up is about 23,500. So this was our max when we had that move. So we've actually gone a little higher. It wasn't immediate though, so there's obviously some variation here. But really we should have pumped up to about 23,500 or thereabouts, and then fallen all the way back to 6.5%. I don't know about you, but if we hit 18,700 again, that would scare the pants off quite a few people. So this is the behavior that we had coming out of the last bear market. So these bear markets are pretty volatile, as when you finally hit that bottom, there's a lot of indecision, and the market will try to head fake you and try to scare you out of your position, even though the bottom is in. So I'm going to be a little bit slower to react until we start seeing some closes that are way out of proportion. Let's look back in 2015 though. We'll look at this bottom as well. So this one was a little unusual because we had such an intense drop, and then the next day we had a pull back really high. I mean, the percentages here are just unbelievable. Yeah, so our next day's close, we had already recovered 38%. So this is going to be a little harder to measure. So I'm gonna just take it from, it's almost like market makers just completely lost control for 2 days, and probably control regained about here. I'm going to say at $200, and we'll use that as our baseline just because just to kind of put it in remote comparison land. So we kind of hit our bottom, and we'll just kind of call it from here. But we moved all the way up to a 55% gain from there, and our highest candle body closed at 48%. So we had exited the red zone. We had established a higher high. We had everything moving up the way we had wanted, and we headed back into this yellow zone, and our ultimate bottom was about 5% higher than our true established kind of bottom. So kind of similar, except for way more volatile. We went up 50%. So let's take a look and see what 50% from our bottom looks like. 50% is about 26,500. 400. So it was a little more volatile than what we've seen, but we did re-enter a yellow zone and we kind of struggled along even though our bottom was in. So these cycles are pretty intense emotionally, and you've got to be, you kind of have to think about it as when we're dealing with Bitcoin and Ethereum, we're looking at really long-term plays, and we don't want to get faked out by the sideways action that happens after the drop, because usually these sideways actions, like once we've kind of put everything in, it's historically been a year from the drop that we finally gain our footing. So we have to be patient and kind of hold on to our hats as we go through this. It'll be emotional. This was amazing though. A 10% drop. There's a lot, and one more thing. This was fully manufactured. If you go to the 5-minute chart and you zoom out, it all happened in one giant move. Like in a matter of 10 minutes, the entire drop was in. Whoever the market maker or manipulator, whatever whale it was that wanted to push this down, they pushed it down 9% in a period of, or actually, 6% in 10 minutes. So they really put a shock into the market, and then the market was essentially recoiling from that point. Like we had a little bit of an initial sell-off to get us down to a little place, and then they really finished it off. But now here we are, we're kind of consolidating and we're moving forward. And now that we have our data, I updated the histogram and this information from yesterday. So I changed the valid data points to a drop of 10% or more. And then I let's see, so it's 10% drop or more, which ended up only being 73 experiences in the history of Bitcoin. So this is a much more rare event, twice as rare as losing 7. And kind of refreshed our data. And then the final thing I did is I looked at not what happens the next day, but what we would expect in a couple of days. So I used 2 days as my parameter. So yesterday we have our official, end of day drop. So we closed at 20,841, and today is, we have 8 more hours on the day. So what happens today is less interesting. We kind of estimated that we'd have a positive day, like 1.5% or so. And right now we're sitting at a positive 1.93%. So this is gonna, have its reaction. But what would be more interesting is to know what's gonna happen at tomorrow's close. So Sunday night's close, how far did we move from the bottom? So reactionary, looking at the statistics, are we going to be coming up off of this bottom and then failing? Do we ultimately have a negative average in 2 days? Or are we still positive? And usually this shock to the system is kind of the end of the bleeding. Well, that's what we're finding out. So our average, when I select all of these, is a positive 3.3%. So that means that after day 1, we usually recover 1.5%. By the end of day 2, we're recovering another 1.5%. So 3.3% return from our bottom should put us at a close around 21,500 on average. So obviously there's variation in what actually happens. And the odds, according to our data, of what will happen is kind of broken down into this histogram here. Our most likely scenario is that after 2 days we'll be at -1 to 3%. So that's straight in the middle. Well, at least that's our highest bar. There are 11 cases where we were between -1% and -5%. So fairly, after a couple of days, it's not too insane. But you can see how there's a lot of data that's skewed onto the right. And they're not small percentages. There's a much higher percent chance that we'll be between +7%, +3 and +7%, and then there's a chunk of +7 to 15. So there's, the odds are pretty good, and then our R-squared is 0, so we have no rhyme or reason between where we were as far as having an RSI value and where we end up going. There's no slope here either, so there's no tendency. It's just straight up. If you ever lose 10%, random. It's the outcome is fully random, and but on average it's about 3.5% that we're going to be going up. So in a reasonably best case scenario, if we were to gain 14%, we could recover this whole bar. I don't think that's super likely. I just don't think that's much. I'm not putting that on the table, but getting back above our 50 is possible, about 7%. But either way, we're willing to ride through this and kind of watch it. I just think our upside risk is less, and the downside, yeah. So in other words, the risk reward here, I believe that there's less downside risk than there is upside risk. I think there's a higher chance that we muddy through this storm and find a better situation. Since I've kind of rambled for so long, I'm going to go ahead and just give us a quick update on Ethereum. Ethereum, absolutely, like, it's beautiful. I mean, I can't even tell you. When we draw this line, and we've established a resistance that we've fought through quite a few times, and then we broke through, we landed on it. So this is absolutely beautiful support. And with we remained above our 100, we remained above our 50, and we'll kind of have to see how things play out, but interesting that it stopped absolutely on this line. And usually a resistance, when you break it, oftentimes you'll come back, establish it as support, and then you move on. So our slope from back here is completely resolved, and we will most likely see some sideways, if not more upside on Ethereum. So those are in great places. A ton of new coins are in the red zone, so we'll be watching those for exits. And our other positions, it's no secret, I have a lot of positions that are in the red right now, and all we do is we place orders to break even, or pay us for our time and energy, and we look for new exit or new entrances that have high probability trades, and we just move on. So we're trading like champs, taking our punches and rolling with it, and we'll have great opportunities ahead soon. But with the market kind of stalling out after this drop, there were no opportunities to sneak in and grab any shorts. So we're gonna have to wait for the right structure for those two. So I don't see any great shorting opportunities right now either. Thanks for making it to the end of my video. So just remember, keep your trade small, be patient, wait for the trade to come to you. Don't get caught up in all of the hype. You guys are gonna kill it.